Hello, hello, gang. Good morning, good afternoon, good evening, wherever you're tuning in from in the world. It's one of those points in the day for you. So I hope that you're doing well. I hope that you're having a good trading day today. If you are in the US, trading the US markets, it's a little bit slower of a week here. You know, obviously we got Thanksgiving coming up on Thursday. My name is Jason Kretzky. It's a pleasure to be with you today. And, you know, we're obviously in the final days of TrendSpider's Black Friday sale. And we recently launched the AI Strategy Lab. Certainly some of you guys are here. What's up, Gary from Jersey? Streaming live. What's up, man? Hope you're well today. Glad you could tune in. Yeah, so we recently released the AI Strategy Lab, and we've been talking about it on social. We went live on Friday. And I talked you guys through a process that I took to create a pretty profitable little strategy on SPY, just using really kind of the basic prompts, nothing really crazy. We released yesterday, we released a blog post that goes over that whole process that I kind of talked to you guys through on Friday. So if anybody was in the house for the live stream on Friday, there is now a big document that details the entire process. I'll go ahead and link you guys to it so that you can play around with it. We're not going to talk through it today, but you know, you might find this helpful as you are developing your own strategies in the lab. So what I wanted to kind of do today, a little bit different from the way that we went about things on Friday. On Friday, I talked you through the process. Today, I want you to talk me through the process, which is to say, I want y'all to help me figure out what name to trade and what time frame to trade it on and what data to train the model on, and then how to go about that whole process. I want you guys to help get me there. Because really kind of the key piece of understanding the strategy lab is understanding how each component kind of affects what the model or how the model is built, and then going and exploring based off of what we find, what models get created. So yeah, so that's kind of how I wanted to frame today's live stream. I appreciate you guys for being here. Thank you so much. Thank you for tuning in. Edgard from El Salvador. Hello, sir. Welcome. Gary, let's see. By the way, you've been playing with the strategy lab. Haven't had much luck with it just yet, but you've had a bunch of your subscribers who've been having a ton of success with it. Okay, so that's really cool. I'm glad to hear that. I'd love to, if any of those folks are in the house, let's hear about it. I want to know what you guys are working through. All right, so Gary says you want to start with Apple. Cool, we could start with Apple. Let's check some things out here. So the first thing that I always think to do, right? The first thing you're going to get asked to do when you're building a strategy in the lab is you got to define your time frame and you got to define the period that you want to train the model on. So it's very important that you do not, well, I wouldn't say it's necessarily very important, but I would say it's generally wise that you would want to avoid training the model on very current data, specifically like the most recent data. You want to be analyzing, or you want to be training a model on previous historical data and then testing it on data that you didn't train it on. So these are two key big components of the strategy lab to, you know, solidify in your head there. You want to be training on past data. You want to be testing on probably current data. You could also test on past data as well, but you just want to make sure that when you select your training data, that it is not the same as the data that you ultimately end up back testing the strategy on. So Gary, what time frame on Apple? What section of the chart? What are you thinking over the past, let's see here, over the past, I haven't paid too much attention to Apple lately. But it looks like over the past 4 months, this thing has basically gone sideways. Let's zoom out a little bit here. If you're looking to, you know, we are all here at TrendSpider, and you TrendSpider users, we're all learning how to use this thing together, right? And one thing, when it comes to the training data that you select, there are some different schools of thought as to how you should be selecting your training data. The one school of thought is, if you want to train a model for a very specific style of price action, let's just say, for example, this section of the chart here, from April, early April this year up to July, middle July of this year. That is a very clear, strong uptrend, right? That is basically one style of price action, let's say, as opposed to, another style of price action is the sideways action that has occurred basically ever since. And you could even argue that there's a couple of different things going on here. You've got this strong uptrend from here to here, and then you've got a nice little downtrend from here to here, and then you've kind of got sideways action from here to here, right? So there's a lot of different things going on there. Again, remember, we need to be training on data that is not super current. But, I'm just kind of showcasing what's on the chart and talking through the thought process of it. So, Gary, you like 4 hour. You'd like to train it 2018 to 2019, which is similar price action on the chart to today. Okay, cool. So let's take a look. There's a lot of stuff going on here, a lot of drawings. So where are we at? Oh, I got to go way back. I just want to see what that section of the chart looks like on the 4 hour. You said 2018 to 2019? Yeah. Is that just January, essentially January to December? So like ish. Something like this section. You tune in just to see. Some of these drawings are not mine. Some of them are my colleagues. This is a team account. But so Gary, this is kind of where your head's at, this section of the chart. This is nice. It's got a little bit of everything. Got some sideways. Got like what? January to June. So like a half a year sideways, basically. Nice strong uptrend into October. Pretty nasty little drawdown into the end of the year. So like 6 months sideways, 3 months gains, and 3 months of down. All right, cool. Let's give it a go. So I'll just do January 1 through December 31st. So for anybody who has not yet seen the AI Strategy Lab, we are here in the lab right now. To access the lab in TrendSpider, just click on the AI Trading Model button down here in the bottom, just below your charts. And so when you're in the lab, you've got the area where you can create the model, and then you've got all the models that you've created. We're not going to talk through any of these models right now. But so we need to input the symbol. So we'll say Apple, we'll say 4 hour, and then we're going to grab 2018. Oops. January 2018. And we'll just go January 1st. All right, so we've got our training data defined. If we want to, we can utilize other markets too. So let's talk through this add another market piece. I'm not going to use this, but you can. What you want to think about when you're training a model on multiple markets is you want to be using assets or time frames or whatever that are kind of correlated. So you don't want to define some beautiful uptrend on NVIDIA and then some gross downtrend on some other name in the same model, because you're going to just confuse the heck out of the model. You want to start with a single market, training on a single market. Once you get a little bit more into the building of an AI strategy, once you understand it a little bit better, and then once you've kind of experimented up to a point where it's like, okay, I got to start trying some new things, then start adding multiple markets. But when you add multiple markets, again, just remember you want to be utilizing correlated assets, time frames, and looks on the chart there for training. So the next thing you got to do is you need to define your reward to risk ratio. When you're building an AI model, we are not defining the conditions that get us into the trade the same way you would for an algorithmic strategy. An algorithmic strategy, like you're used to building in TrendSpider, you are defining very specific criteria of price action, of indicators. You're defining very specific settings. And when you build an AI model, you don't have to define all the specifics. The model's going to define those specifics for you. What you have to define is your horizon. How long do you want essentially to be in a trade for? Like what's the window that you want to give that trade to work? And then you need to define your reward to risk ratio, which is how much are you risking versus how much are you making, right? These are the values that allow the model to decide what to do and how to do it. On this chart here, you see these yellow candles. The yellow candles represent anywhere where you might get signals based off of your horizon. Currently, the default is 40 candles. This can go up to a max of 50. And our reward to risk ratio, which is preset to a 3R, a 1.5% take profit, a 0.5% stop loss. And of course, as you adjust these values, the yellow candles are going to change because depending on how you have your R values, or how you have your R set up, your stop loss and your take profit, and the relationship between those two values, it will depend or it will change what candles actually throw off signals. Russ talked us through the process, or talked us through the kind of a more deep understanding or a more deep explanation of what these yellow candles represent and why they're being selected. If you're curious to like dig into that, I'm not going to dig in too much today, but if you're curious to dig into that, we did do a webinar with the developer of the AI Strategy Lab. I believe it was last week. Yeah, last Wednesday or Thursday. And he talked us through that deeply. It's on the YouTube page. You can find it and dig in. But as you change your R, then things are going to change. The amount of candles that offer that signal are going to change, right? So just keep that in the back of your mind. Play around with this to your heart's content. I don't think that there are any specific rules here, but keep in the back of your mind, like, what is a realistic target for the time frame and the window period that you're choosing. I'm using a 40 candle window period on a 4-hour chart on Apple here. How far can Apple move in 44-hour candles? You're talking about, it's like a day and a half essentially of price action per candle. So, or rather, not a day and a half. I'm sorry. It's like 3/4 of a trading day, because the trading day is 6.5 hours. So about 3/4 of a day per candle, and you got 40 candles. Can it move 5% in that period of time? Sure, probably could. I'm curious though, Gary, what are your goals here? What are you trying to get out of your 4-hour strategy? What is a decent amount of risk that you're willing to take? I think that's something to really kind of think about. January through December. I'm just going back, reading really quick. You're expecting the chart to go down from here based on some of the macro stuff. Gotcha. Interesting. Like Buffett continuously selling. But yeah, what do you think, Gary? What is a reasonable percentage or a percentage take profit to try and achieve here? I kind of almost lean on I lean on the side of like a little bit higher than the preset. 1.5% is the default, 1.5 and then 0.5% stop loss. I kind of lean a little bit higher than that, maybe 3-to-1, or maybe, I don't know, what's 6-to-2 look like? zoom out a little bit. And again, this is presenting over the current chart. So do keep that in mind. Even though we're using a training period that's much farther back in time, this is showing us all of the candles in the near term on the, on the current chart that would give us a signal based off of simply our reward to risk ratio here. You'd stick with the standard. Okay, so 1.5. All right, well, let's just stick with the standard then. That's fine. I worry that half of a percent stop loss might trigger us out a little early, right? It's not giving it a ton of wiggle room, especially for the window period that you're giving it. Now, maybe you could play around with a smaller window, but perhaps if you play around with a smaller window, you might get pulled out of this trade more quickly. I don't know. It's all stuff to consider, and just thinking it through. Also, once you've created a model, once you've found a model that seems to work for you and you decide that you want to deploy it, you can always go and adjust your take profit, your stop loss, your horizon in the strategy as well. Yeah, I don't know. I don't necessarily know if there's a right or a wrong way. I think it's just a matter of testing it and seeing. Apple, I don't follow Apple super closely. So as far as like its volatility, its average trading range, those are things that we could look at, but I'm not sure what those are just right off the bat. Definitely gives a lot of signals though with a smaller range or a smaller window. Let's go back to 40 and kind of see, and everything looks about the same. And that's fine. All right, so let's just keep it standard. Let's just keep it at 40. That's fine. All right, so we're going to stick to the basics here. Just 1.5% take profit, 0.5% stop loss with a 40 candle window. Next thing we need to do, we need to pick an AI model type. Now, Russ told us last week during the webinar, he said if you are well-versed on utilizing AI, then perhaps you, and you're good at, what's it called? Ooh, I can't think of the name of it right off the top. But essentially, if you know what you're doing and you've used AI models in the past before, you're good at feature engineering. That's the term that I was having trouble coming up with. Then perhaps the naive Bayes or the logistic regression models might be more suited for what you for your skill set. If you're like me and these are you're in your first week or two of playing around with this particular tool, you've never made AI models before, then Russ, our head developer, suggested that you utilize a more powerful model. So the more powerful models are the random forest and the k-nearest neighbor. The kind of like less powerful models are the naive Bayes and the logistic regression. And that's really the difference between the two. If you really know what you're doing, you're used to doing feature engineering, then you might be best suited for the naive Bayes or the logistic regression. If you don't know what you're doing and you just need the model to do a lot of the heavy lifting for you, then the random forest and the k-nearest neighbor. He suggested starting with the k-nearest neighbor. The random forest is the most powerful of the four models. It definitely, as you'll be playing around in the lab, you're going to notice the random forest model takes probably twice the time generally for a model to create something for you. So do keep that just in mind. If the random forest is taking, 2.5, 3 minutes to make a model for you, that's pretty normal. Whereas the logistic regression and the naive Bayes models usually are created pretty quick. But I'm going to stick to the k-nearest neighbor. That was Russ's suggestion for kind of where a newbie should start. So we'll start with k-nearest neighbor and then model inputs. This is where really a lot of the magic is. You can utilize or you can kind of take several different approaches here. And I want to know, Gary, what your approach is. I believe you're a MACD guy, right? So maybe you want to focus on MACD. Yeah, so a couple of different things you can do here. First of all, we've got some pre-made prompts. Pretty simple. As you can imagine, there's quite a bit of variation here Focus on very short-term momentum and also pay attention to volume. Focus on potential reversal signals for your prediction horizon. Use multiple RSI links. This is something that we utilized last Friday when I went live. We kind of talked about how I built something based off of this, but then adjusted it to what I thought made more sense for me. Focus on price action solely. Be adventurous and try a totally new strategy. You can also come in here and you can write a prompt of your own, whatever prompt you want. Only use MACD. Right? Like I could do that. Only use RSI, only use Bollinger Band width, right? That sort of thing. So Gary, keep in mind anything that's unbounded, meaning like a moving average, right? Moving averages are unbounded. One moment they're one price, another moment they're another price. 5 days later, they're a totally different price, and 10 days later, they're a totally different price, right? A bounded indicator would be something like an oscillator that goes from 0 to 100 or what have you. So you do want to keep in mind that piece of it. You can't just say use moving average cross or something like that. You can talk about distance to a moving average, price relative to a moving average, right? Because that's a much smaller, even though that's not quite a bounded value, it's much smaller, right? Price is only going to get so far away from a moving average at any given time. Usually when you add in some indicators, I always get the AI doesn't come up with the model, can't provide enough reward. Okay, interesting. So we could start here and just see. We'll get the AI suggestions. And then the other thing you can do is you can edit inputs manually. So like if I wanted to, I could just go in and manually add an indicator or manually add a custom formula. But we're just learning here. We're just playing around. One of my colleagues calls it shaking the magic 8-ball. I think that's a really good figure of speech for kind of what we're doing. So let's just say use MACD only. And let's see what the AI suggests. I don't know what it's going to suggest. So we'll see. So this is usually a pretty quick process. Happens really fast. All right, so we got MACD. It's using the MACD line. It's using the signal. Oh, so it's not using these, but it's creating, it's creating essentially formulas off of the MACD. So these are not checked. And you can see it says neither this input or, oh, well, I guess we could throw it in there if we want to. I'm going to keep it exactly how it is, using the histogram, and then it's creating formulas based off of kind of different calculations around the MACD and the signal line. This is a calculation of the MACD line. So see, it's how it says formula A minus A5 divided by 5. So this is taking the current MACD value minus the MACD value 5 candles ago, dividing it by 5. This is taking the MACD signal value minus the MACD signal value 5 candles ago, and so on. This is taking the distance between the MACD line and the signal line, right? A minus B. So it's the AI is creating these formulas automatically for me. I'm not having to do anything. So now I've got my model inputs, I've got my training data, I've got my asset, I've got everything, and now I can just start training a model. And so it's going to build a model for me. And this may take, I don't know, 45 seconds, maybe a minute or something like that. It may be shorter than that. And we're going to talk through a couple of different kind of things that we can do depending on what we find here, right? We could get a model that looks terrible. We could get a model that shows a little bit of promise. We could get a model, we don't really know what we're going to get here. And I think that's the big thing about the strategy lab is, so we got a model that looks pretty darn bad. Great, that's fine. We didn't really do any work to get here, aside from looking at the Apple chart and saying, yeah, we want to use MACD. We want to look at this period of the chart to train it on. All right, so then the next step, what do? We got a model that looks bad. Well, then there's a handful of things we can try. So I'm going to click on where it says build up on it. When I click build up on it, it brings back up all of the inputs that were just made for me. So what I'm going to do, I'm going to go get AI suggestions, and I'm just going to say, use MACD only again. And I'm going to see what it makes. Like, I don't know what it's going to make. It may make a whole new set of inputs that are totally different from the inputs that it made over here. It may not. It may make the same set. It may make a slightly different set. I don't know. I don't know what it's going to do. So it looks like it made a very similar set. Let's throw these into the equation. And let's also look here. We know that it didn't train on those. And we know that, let's see, the MACD, the change in MACD had an importance of 46% to this model. The difference between the two had an importance of 59. We know that this particular input F, this is B minus B5. So this is the signal line minus signal line 5 candles ago. Change of signal line was the most important piece of this model that turned out bad. So maybe the first thing we want to try is maybe removing that. So I'll do that. I'll remove that. I'm going to add these back in. I don't know if that's going to do anything. Actually, I'm going to keep those out. But let's train another model. So we're training the same, essentially the same everything, except we removed the piece that had the highest importance in this lousy model. All right, so we got another lousy model. Bummer. From here, there's still all kinds of things we could do, right? Like this step of crossbreeding. So crossbreeding is essentially taking a random array of inputs from the first model or from a selection of models. In this particular case, it's just these two, but you can crossbreed as many models as you want, pending they're using the same asset, the same training data, and the same model type. So we're using KNN models for both of these. And so I'm just going to crossbreed them. They're lousy models, but oh, wow, interesting. Couldn't create any new ones. Let's try this again and see. Okay, so now we're crossbreeding these two models, two lousy models, crossbreeding them to see if anything happens. 3% we're winning, minimum. Okay, so we got nothing, and we got nothing. Interesting. All right, cool. So then the next step that I would probably take, because this so far is not doing a very good job, is it, Gary? Another step we could take here is let's take this model and try all the other model types. I'm going to go ahead and remove these three because we know that those are no good. So we're just going to delete them. We're going to keep tooling around on the one that we have and just see. We don't know. This is again. Yeah, no, it's not just you. I mean, it's this is the process of playing around. We don't know what it's going to find. So we just have to kind of tool around until it finds something. All right, so we got nothing here. Nothing that's really showing us anything that would get us excited at all, right? Is it possible to use relative performance? Unfortunately, not yet. But I believe that somebody asked that. I think somebody asked that in the webinar with Russ last week, I believe. And I would imagine it's coming. I know that support for custom indicators is coming in like 2 or 3 weeks. So perhaps along with that, relative performance will be possible too, because I know there are custom indicators built around relative performance. So, all right. So all lousy. Nothing worth keeping here. The next step that we might want to take is we might want to try some slightly different things. Like we might want to try a slightly different prediction target, right? Right now we're using 1.5 and half. Maybe we want to try 3 and 1, or maybe we want to try 5 and 2. You know, like I don't really know. Let's try it. Let's see. Using all the exact same stuff, the same model inputs, same everything. Let's see if that helps. Because we really don't know. Nothing. Let's crossbreed these real quick and just see. Oh, they have different take profit stop loss, right? So I can't crossbreed them. All right, let's dig into the model inputs here. Let's try this. I've had a little bit of luck adjusting the preset lengths for these sorts of things, giving the formulas, giving them a bit wider of a range. Like currently it was using 5 candles, so I'm going to use 20 candles and just see if that helps at all. Nothing. Okie dokie. We keep moving. Let's try this. Let's see, what is this one? D divided by high minus low divided by close. So this is the histogram. Let's try this. Again, no rules here, right? And one of the beauties of this whole process is I'm not spending a ton of time in the strategy tester defining specifics, right? With an algo strategy, you've got to define those specifics, whatever those specifics might be. And with each time you're making very specific definitions, you're using mental bandwidth. And in this particular case, I'm not using any real mental bandwidth. I'm saying use MACD, you know? Does it work? No? Okay, cool. Let's try something else. What about MACD with whatever you think makes sense? So it spits out something that it thinks makes sense using with MACD. We can kind of talk through those things. What's in here? MACD history. Well, relative strength, ATR, stochastic K, ADR. Interesting. 3 signals captured. 4 of them were winning. Minimum win percentage required 25%. This is not enough winning signals for your reward to risk ratio. All right, cool. So let's do this. Let's try some other model types here. DJ, what's up? Apple is hard. You've tried. Interesting. I'm almost wondering if we should go down to a lower time frame. Okay, so these are no good. Can you recreate the SPY 15-minute I did the other day? Yeah, for sure. I mean, they're in here. We can while that one's building, let's take a look at that Tesla one. Here's the Tesla one. So this was built on a 30-minute from August 2019 through November 11th, 2021. We could take a look at that chart. I'm almost certain that that whole selection was picked for a very specific reason. This is one that one of my colleagues made. August 1st. Actually, let's just go to a daily and zoom out a little bit. So August 2019 through November 2021. Interesting. Okay. So kind of this whole expansion period. Kind of here-ish through November. to here-ish. So this whole move. And the way that they built it, I believe that they just used a prompt. One of the, let's see here. Short-term momentum and volume was the prompt that he used for it. Just this one, the very first preset prompt, literally. And so what it kicked back was these were the inputs. RSI 14, momentum of 5, OBV. And it used OBV to give you a change in OBV. So it didn't actually train on unbalanced volume, again, because that's an unbounded indicator. ATR, this was your close. So close minus close 3 candles ago divided by close 3 candles ago. So like change in price. Money flow index. And then another calculation using volume and closing price here. So let's look back at what was just created. Lousy, all lousy. All right, cool. Keep moving. Let's delete these and make sure I don't delete my good models here. I will say this, when you are creating models, once you create a model that you are stoked about and you deploy that model, when you start creating new models, make sure that when you go to delete models that you are not pleased with, that you do not have any interest in continuing to use, make sure that you do not accidentally delete a model that's deployed that you like. Because once you delete it, it's gone. So when you click delete models, you get this prompt. Make sure the amount of models that you have selected are only the ones that you want to actually delete. Delete 5 selected models. I do want to delete all those. So let's get rid of them. All right, let's open this thing back up. So what I'm going to do, I'm going to use a different date range. I'm going to use a wider date range. I want to start there. So I want to try and get something that works. I do not accept that Apple is just hard and it's not possible. Let's use just a random date range, but give it more time. So 3 years of data. Actually, let's give it 4. Because it's just as worth trying a random section of data as it is very specifically honing in on one, right? We'll keep everything the same. Let's give this a little bit more time. We'll give it a 50 candle window. Let's try and tool around with different percentage returns or different percentage take profit and stop loss. Same R. Let's stick with K nearest neighbor. And we'll try focus on MACD and related indicators. You can't give up, Gary. What are we giving up for? All right, so some of the same prompts. This is a much bigger range here. 50 candle range. Some RSI in here now. Average true range. And then histogram divided by ATR. Let's see what happens. We don't know. We're traders, man. We don't give up. You don't give up just because a trade goes against you, right? You take the loss and try again. All right, so at the very least, we have a model that looks different now. That's something. We do have a regression line, which means essentially the model's going in the wrong direction. We do not, this still is not a good look, but let's just take this and let's try other model types. Again, going through the same processes as before, trying all of the different ways that we could explore outcomes. I still have very little buy-in here, right? Like, this is a very unserious process that I'm taking, I guess. Which I think is the thing to remember, right? Like, if you're building something manually, if you're building an algo manually, each step of it, you're thinking through. And here, I'm not really doing much thinking. I'm just adjusting parameters. And if I come up with nothing in an hour, okay, I come up with nothing. Who cares? All right, so the random forest finally giving me a little glimmer of hope. And that's sometimes what you're going to see with random forest. It is the most powerful of the 4 model types. So perhaps maybe I need to explore this random forest a little bit further. So let's build up on it. And let's see what was kind of most important to it, what was least important to it. So you see this G item was not very important to the model, but what was important to the model was the E input. So the E input is a measurement of MACD, right? MACD relative to where it was previously. So a couple of things we could try, right? We could try removing the most important piece and seeing if there is anything better in there. We could try moving the least important piece. I'm going to try removing the least important piece first. Excuse me. So let's remove this input and let's train the model again. While that's training, I'm going to get rid of some of these lousy guys. Now, of course, we're trying to find a model that looks a little bit more like this one, this RSI model. This was what we created on Friday. Walked you through the creation here. Again, the whole walkthrough of the creation of this model is in that blog post that I shared at the top of the stream. There is a link in the chat if you're interested in reading through it. But we're looking for models that are going up and to the right. Meaning as confidence is increasing, your win percentage is increasing as well. All right, so our new random forest model doesn't look quite as good as our original one. And remember, we removed, in this one, we removed the lowest importance input. Let's try building up on it again. I don't know. Let's remove the most important input. See what happens. You don't know. So now we're going to have 3 random forest models, all made with the same basic stuff. So we could, in theory, from here, we could crossbreed them. And we could continue crossbreeding them if we want. I'll probably try that next. You blame the fundamentals? While we're waiting, Gary, you had something you wanted me to tell the folks. We are giving away some TrendSpider accounts here in the final days of our Black Friday sale. Ooh, that doesn't look good. And Gary, I believe the deal is if you follow us on YouTube and your channel on YouTube, right? You enter in to the drawing. Is that right? For a free account? Maybe you can leave a little note about it in the chat for anybody who's not yet a TrendSpider trader that's tuned in that might be interested in trying to get a free account. I'm going to delete this bad boy because not impressed. But let's take these models. Let's crossbreed them. When you crossbreed, what you're going to get is a crapshoot. Sometimes you're going to get a good model. Or rather, sometimes you're going to get 3 new models. Sometimes you're going to get 1 new model. Sometimes you're going to get 4 new models. It's super random. I don't know how it decides what it's going to make. What period are we testing here while we're looking? Okay, here we go. All right, so we've got 2 models that are not so great. And then we've got 2 models that are showing promise. These 2 are showing us a little bit of promise. This most recent one, definitely looking better than this one. It's at least giving us more signals that are within the confines of our R, right? So that's at least encouraging, at the very least encouraging. So let's remove these 2 guys. And I kind of am constantly auditing this myself when I'm playing around. If you don't delete models that you're not interested in, you're going to accrue models very quickly doing the process this way that I'm doing it. So let's delete these guys and let's go and crossbreed these again. These were our 2, they show some promise. And notice that the conditions that, or rather the inputs that are creating these models are quite different now. And this is just done from crossbreeding, right? And again, crossbreeding, it's taking the best, the worst, random inputs from the 2 models and creating new models based off of that. So let's crossbreed these 2 guys again. Russ told us when we were in the webinar last week, Russ told us that he was seeing some pretty decent results after like 3 or 4 generations of crossbreeding. So we just crossbred theoretically the first generation, right? This is our first generation crossbreed here, and then we'll get generation 2. So we'll see, maybe things will slightly get better and better as each crossbreed occurs. I don't really know. While we're waiting, I want to look and see. All right, so that one turned out to be not so great. I want to see the data that we're testing on. January 1st, 2015, January 1st, 2019. So we are training. So this is the data that we're training on. Kind of has a little bit of everything, doesn't it? Nice little sideways down section through July 2016. Big strong uptrend through October 2018. Nice dump here into the new year of 2019. So it does have quite a bit of everything. All right, so we got another model that's showing us a little bit of promise. So now we've got 3 models showing us a little bit of promise. Let's get rid of this one. And let's select all 3 of these. Let's crossbreed them. Gary, you got to run. Absolutely, man. Great to have you. If we don't see or talk to you before Thanksgiving, have a great one up there in Jersey. Hopefully you guys are seeing the potential here. Hopefully this is getting you at least interested in playing around with this thing. Because, I mean, that's really what it's all about, right? It's kind of about exploring. It's about doing a little shake of the 8-ball. We just don't know what we're going to find. We don't know what the AI is going to create for us. But I think the key is don't give up after 5 minutes, right? All right, so we got another model that's up and to the right. Let's do this. Let's get rid of this one because we know this one's no good. Let's take this one. And let's take these 3. And see, actually, let's take these 2 and crossbreed those. While we're waiting, does anybody have any questions about anything? Anything that I haven't like touched on that you're curious about that I can help you with? All right, 2 more models. This one, let's remove this guy. Crossbreed all of them. Let's remove this guy too. No questions? No nothing? You sure? I'm here. Take advantage. Delete this guy. What we might also want to do, we might want to go into one of these models that's showing some promise and try and build up on it a little bit. Perhaps adjusting some of these, maybe pulling stuff that isn't very important to the model and seeing if things get better with it. I'm gonna delete that model. Let's do that. Let's take this guy and build up on it a little bit and just see what stuff is not important. Okay, so this one didn't even really use too many indicators. So that's kind of interesting too. Like, notice as we've gone through these different models, some of them have quite more inputs than others. This one just has 5 inputs, where some of the other ones had like 8 or 9. I do think that, at least to some degree, simplicity is understated. Like, you might have a little bit more luck creating models with more simple inputs. Like, let's look at this one. What do the inputs look like on this one? Yeah, 7 inputs for this one, and it wasn't a very good model at all. So let's go back in here. Another thing we could do is we could take this model and try the other model types on it. Maybe we'll find something there. Hopefully this is, at the very least, getting your gears turning a little bit. That's really kind of the whole goal. All right, let's get rid of these guys. Not really impressed with any of those. So let's go back to this one. Let's just try something. What I'm doing is I'm just adding some additional things here, just different lengths. On some of the indicators that it uses. Let's also do this. Interesting, RSI 14 is the thing it used the most. Is the liquidity heat map something you ever use? Hey, Jeff. You know, Bookmap has become really popular the past year. Didn't know how in-depth TS liquidity map was. Liquidity map. Do you mean like the heat map? This guy? Is this what you're referring to, Jeff? Got it. Yeah. So this is something that I used, I guess, early on. I've kind of learned how to see it without seeing it, sort of thing. But what this is looking for, the price, essentially price making the same highs and lows or opens and closes, like a cluster of candles with very similar highs and lows, or very similar opens and closes in like a tight range. So like the brighter, the bolder, the red color, the more consolidation occurred in a range, in an area. And then of course it extends that out in time. So as time goes on, that area's ability to potentially act as a level of support or resistance can kind of weaken over time. And of course, as you trail out to different time frames, you're going to get different areas potentially being highlighted. But yeah, I mean, it's a way, I would use it personally as a way to kind of like confirm something that I'm seeing. I'm a price action guy, so I'm always kind of looking at pivots, wherever the major pivots are. And oftentimes this thing is going to just highlight the main pivots for me. Sometimes it gets a little noisy for my taste, but depending on the time frame, you're going to see different things depending on the time frame. Higher time frames, especially when if you're on a chart that is pretty consolidated sideways, they can lose their like clarity. Yeah, and there is a way to adjust kind of like how powerful I believe there's a way to adjust the like to filter it a little bit, but I almost think it's in the, admittedly, I haven't utilized this in quite some time, but I almost think it's in the advanced settings of the trends. But if I'm going to use heat maps, the one that I'm going to use personally is the horizontal. The trends one's kind of interesting too. This one takes into account all of your auto trends. If you turn on the unfiltered, it's looking for kind of like the key trend lines and then turning heat maps into them, or turning them into heat maps rather. Yeah, but every chart's going to look totally different depending on what it had done historically. Right, pretty clear, obvious areas here on Bitcoin hourly. Whereas if you were go down to maybe a smaller time frame, not quite as clear, still pretty clear spots. All right, models have arrived. Still nothing that's like super stand out. Let's delete this guy. But we could continue on here with this, right? I could do this all day if I really wanted to. And eventually we're going to come up with something. Once you find something that you like, deploy it. Let's just call this Apple live stream test. Once it's deployed, there are quite a few different ways that you can utilize this model. So I just want to very briefly walk you through them, and then I got to jump out of here. The first piece here is once you deploy a model, it's going to be available as an indicator. So here is our model. Overlay it on the Apple chart. It's showing us every single time there was a signal that met the criteria of that we've defined for our model. So like essentially like anytime there's a yellow candle, it's going to give us a marker here. We could take this, of course, this is the obvious next, the big next step is you want to bring that model over into your strategy tester and start playing around with it. Again, remember, very, very key important thing here. You do not want to strategy test your model on the same data that you built it on. Or you do not want to strategy test your AI strategy on the same data that you built the model on. It tells you in the entry criteria the date range that you tested the model on. So you want to be testing, or that you built the model on. So you want to test on a date range that does not include January 2015 through January 2019. You can absolutely do January 2019 through now, though. So we'll do that, and we'll just see. I don't know. Maybe it'll come out good. Maybe it won't. Didn't come out very good, did it? So let me do this. But we are certainly taking a lot of entries. So then you might want to go in and try and figure out, like, why is it working? What's not working about it? Though you cannot adjust any of the conditions that are defining your entry, you can absolutely add to those conditions. You can add parameters. You can increase the confidence level and say, you know, I only want you trading a higher confidence level. Let's bring it up a little bit and just see. I don't think that it's going to make a huge dent on the returns, but it does make a huge dent on the amount of positions. Holy moly. I tightened it up way too much. You can also make adjustments to your take profit, your stop loss, your number of candles have passed. But still not getting very good returns here. So, you know, might be time to go back to the drawing board and see what else we can create. See if we can make some adjustments and make it better. My time has run out though here. So I am going to have to get off. I really appreciate you guys hanging out with me. We didn't have much luck today, and that's all right, right? The whole piece of it is we didn't really put too much effort into it either. You know, we just were tooling around, playing around, using an idea that Gary gave us earlier. And perhaps this isn't the direction we need to go. Perhaps we need to just try something totally new, and that's fine. That's what this tool is all about. Trying random things, seeing what works. And if something works, great, moving forward with it. If something doesn't work, then dumping it and trying again. We're going to continue exploring here on our end. We're going to continue sharing what we find. And if you are a TrendSpider trader, we hope that you will do the same for us. We would love to know if you're finding things that are working, send them to us. Let us see. Tell us about them. Tag us on Twitter, post that, and let us know, because we're just as curious as you are. Again, last call for Black Friday sale. It ends on Friday. So if you're interested in trying out the lab, you're interested in trying out TrendSpider as a whole, Take advantage of the deal while it's still with you. It's up to 65% off. We also are giving away a TrendSpider account. TrendSpider plus Signal Stack for a year. Signal Stack being our trade execution platform. All you got to do, follow TrendSpider, follow Signal Stack, like and repost, and then comment the MVP FinX account from 2024. Cutoff for this entry is December 1st. All right, guys. Again, thank you so much for hanging out with me. We'll do this again. Maybe next time I'll bring you something awesome that I found. I'm sorry we didn't find anything today, but that's how it works sometimes. Y'all have a great rest of your day. If I don't see you before, if we don't talk before, I hope you have an awesome Thanksgiving holiday. And we'll see you guys again soon. Yeah? All right. Take care.